Yeah, good morning, students. Today we are going to discuss here about the IAS Indian Accounting Standard 38, which defines intangible asset. In this intangible asset, we are going to discuss about what is the definition of intangible asset, how we are going to recognize it, and what will be the subsequent recognition for the same, and what are the internally generated intangible assets are there. Okay, so let's start. So if we talk about the meaning or the definition of intangible asset, so there is a three conditions there. If we are fulfilling all three conditions, then only we will say it as an intangible asset. So what is the first condition? First condition is here identifiable. Now, what is the meaning of identifiable here? If any intangible asset we are buying or selling separately, here what is the meaning? Just take example. If we are buying that intangible asset or selling that intangible asset separately, not with any other thing, then only we will recognize it as an intangible asset. For example, if any app we have made, so that app will be buying or selling separately only. If we talk about the goodwill, so that goodwill, if we are buying or selling the business, then only with that business that goodwill will be buy or the sold. So in that case, goodwill will not be, according to IAS 38, we will not take goodwill as an intangible asset. We will not calculate goodwill according to the IAS 38. That will be calculated under IFRS 3. Now, second is here, arises due to contract or the law. Any contract, any intangible asset which is arises due to the contract or the law or with legal terms, then only we will recognize or we will tell it as an intangible asset. Just say example, any licenses. License generally we used to create by the law only. Now, second meaning, second point is here non-monetary asset. It should be non-monetary asset. Now, what is the meaning of non-monetary asset here? The assets whose value is not fixed, whose value is always fluctuate. That all will be your non-monetary asset. Okay. So if any asset whose value is not fixed, it is fluctuating by the time, that all will be your intangible asset. Okay. For example, if we take the example of debtors, so debtors is also an asset, but its value is fixed. If any debtor is there of amounted to rupees 1 lakh, so it will be 1 lakh for all the period, if we are going to pay it after 1 year or 2 year or 3 year. If we see the cash, so cash is also your asset. If the value is 500, so after 1 year, after 2 year also, it will be 500 only. Okay. But if we see any app or any licenses, so we can say that its value will be fluctuated by the time. If today its value is 1 crore, so after 1 year or after 2 year, it could be 1 crore 20 lakh, or it could be 80 lakh, like that. Okay. So if any asset whose value is not fixed, that all will be your non-monetary asset. So second condition of this intangible asset, it should be non-monetary asset. Now, third criteria is here, without physical substance. Okay, this is the very general meaning of intangible asset, that we can't see it. Okay, so if without any physical substance it is there, so it will be your intangible asset. So if we see, if we talk about the definition, there is a three condition. If all three conditions are fulfilled, then only we will call it as an intangible asset. Now, coming to the recognition criteria. Recognition criteria here means whether it will be showing there in the balance sheet or not. Okay. what is the condition there. If that condition will be fulfilled, then only we will recognize it in the balance sheet. So what is the condition there? Basically, two conditions are there. First is future economic benefit, that is FEB. Here, future economic benefit means if we have any intangible asset in our business, that should give you the economic benefits to you. Okay, from the use of that intangible asset, there should be the gain or the income in the future. First condition. Second condition is cost measurement, that should be recognized at the cost. Initially, the intangible asset should be recognized at the cost. Okay, we will be able to measure the cost reliably. So if these two conditions are fulfilled, then only we will recognize this intangible asset into our balance sheet. Okay. Now, what is the subsequent recognition? Subsequent recognition here means uh, after 1 year, what will be the value of the same? How we are going to measure the value? So we have a two method. One of the method we can take to measure the value of the intangible asset. First is your cost model. Basically, we see what is the cost incurred in having that intangible asset less depreciation amount. Here, in case of intangible asset, we called it as a amortization of the intangible asset. So we have to deduct the amortization amount. Now in revaluation model, every year we have to revalue or we have to find out the fair value of the intangible asset. Accordingly, it will be recorded in the balance sheet. Now, what is the one case is here that in case of intangible asset, revaluation model is somewhat difficult because for the intangible assets, there is no so much active market where they can check what is the fair value or the current value of this intangible asset is. So most of the time we used to calculate the value of the intangible asset by the cost model only. Now we will discuss here about what are intangible, internally generated intangible assets are, and if it is a internally generated intangible asset, what will be the treatment. First, what is internally generated intangible asset? Basically, if in our company only, if we have generated some intangible assets like goodwill, we generate goodwill or we just earn the goodwill from the passage of time as we are doing a good job there. So if it is a goodwill, internally generated goodwill, or if it is a internally generated brands or the masthead. Masthead here means the logos of the company, or if any customer lists are there. Now, what is this customer list? Basically, some organization have the business model to use the customer list only. Okay, just say example, the cred business model is here. They used to collect the customer list according that what is their purchasing pattern, what they purchase more, what they purchase less, what kind of purchase pattern of them are there. By just if when we pay the credit card amount by using this cred and all, so they used to collect the information from our payments only. And when they collect all these data, that what is our purchasing pattern, they used to sell it to the online platforms like Amazon or Flipkart or Myntra and all. So from there they used to earn the income. So if any customer lists are there or any purchasing titles are there, so if these internally generated intangible assets are there, we are not going to recognize it in a balance sheet. If any income or any expenses are there, so we are going to show it in a statement of profit and loss account only. It will not impact your balance sheet as an intangible asset. Now, Some other things are also there, like the research phase or the development phase. In this case also, what will be the treatment if we are doing a research about any intangible asset, or if we have already developed any intangible asset. So if it is a research phase, so basically what are the conditions there? That it should be aimed to gain a knowledge. There should be some research there. From there we are going to gain a knowledge. Okay, so if in that research period, it is not necessary that it is going to be successful only. So in that case, if it is there in a research phase, so we don't take it in a balance sheet as a intangible asset. Whatever the expenses has incurred in the research phase, we are going to charge it in a statement of profit and loss account only. Okay, and if it is a development phase, in that development phase, if that development phase just fulfill the 6 criterias, in that case only we will take it, or we will recognize this as a intangible asset. Now, what are the 6 criterias there? That it should have the technical feasibility, it should have the intention to complete. Okay, there should be intention to complete. We have started the research, we have already in a phase of development, but if we are not completing it, then it will not be your intangible asset. Ability to use or sell. Okay, if we have already developed, it should be used for buying or the selling purpose. Okay, or it should give the future economic benefit to us, or resource should be available for a long period of time, or there should be a cost measurement, the cost of the intangible asset if reliably measured. Okay, so if these 6 conditions are fulfilled, these 6 criterias are fulfilled under the development phase, then only we will recognize it as a intangible asset. Otherwise, if in this internally generated intangible asset, if these are in the form of goodwill, brands, masthead, customer list, so we are not going to charge it in a balance sheet. Or if that is there in the research phase as well, then also we are not going to charge in a balance sheet. If any income or expenditure is there related to these, so we are going to charge it only in a statement of profit and loss account. Okay, in the development phase also, if these 6 criterias are not fulfilled, so in that case we are going to take, or we are going to charge it in a statement of profit and loss account only. It will not be recognized as intangible asset in the balance sheet. So this is all about a very short introduction of the intangible asset. Okay, thank you, students.